Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Before I get to my guest, I just want to say thank you. We're 167 episodes in now, and I appreciate every single one of you who is listening right now, all the way through to the end of the episode, hopefully, because remember now at the end, I'm dropping previews of each next episode that's coming up. This week, my guest is Chris Seveney, who I've actually known from being on BiggerPockets, him and I in the forums for probably close to 10 years, but this is the first time we went face to face to record this podcast. We're going to talk a lot about his journey from all different forms of investing until he found the path to passivity through mortgage note investing. Again, this is the journey all the way from beginning to where he is now with Chris Seveney. Let's go. This is Zen and the Art of Real Estate Investing with my guest, Chris Seveney. Chris is the CEO and co-founder of 7E Investments. He has carved out a very interesting career, multimillion-dollar asset portfolio, managed the construction and rehab of properties worth over $150 million, managed an impressive $750 million in new construction, and since 2016 has been in the mortgage note game, which we're going to talk about a lot. Chris, welcome to the show.
Jonathan, thanks for having me. Glad to be here.
Yeah, I'm excited to have you here because we were joking before in the pre-call that we've kind of known each other for at least 10 years just from the forums on BiggerPockets, but this is the first time we've ever connected. It's been an interesting road, right?
Oh, it's interesting, long, but fun, entertaining, and you never know what tomorrow is going to bring in the world of real estate.
Yeah. Even I got the BiggerPockets shirt on to represent since that's where we've met. But just in terms of that, though, because we've both been on there for a long time and we're both seasoned investors, what have you gotten out of having that as a hub? Because there's still really nothing like it out there. And you and I still use it, 10 years later.
Yeah, it's a great place, a great forum to meet new people. I can't tell you how many people we've met, how many people I've learned from. It's what got me started in note investing.
Wow. Okay.
To be honest. And, for me, and kind of rewinding back my story, as we talked about, I've been in real estate for a really long time, since the late 90s. And I've done construction management. I started a multifamily group for a real estate developer, managed a family office. And in 2016, I was trying to figure out kind of the next move internally for my own portfolio and realize, what do I got to do? And the tax lien and notes section, I was like, whoa, I didn't know you could do this. And actually, I started with tax liens and I was like, this is goddamn boring. And excuse the phrase. And then I realized, you can buy defaulted notes. This is fun.
Yeah, but I think it's really interesting to note that you, even having been in the game for a long time, just hadn't even considered notes there's a lot of these parts of real estate that I think we can kind of fall into. You got there because you were looking for something new to add to your own portfolio, right?
Yeah, we had a few rentals and we're in the Washington, D.C. area, and the market is always competitive here. We're somewhat shielded a little bit from economic turntowns because we got this thing called the federal government. If you haven't heard about them, they're nearby and they spend a lot of money and they hire lots of people. So when you live, 10 or 15 miles from the nation's capital, it's kind of a security blanket. But what makes it hard is it's expensive. And if you're not looking at those assets that day, they're gone.
Yeah.
And if you're working a full-time job, if you got a wife, you got kids, it's tough to compete. And that's really what it boiled down to is we got some properties we were rehabbing on the weekends and my wife and I are like, this is just too much. Let's figure something else out that we can do.
Yeah, I think that's a hard part for a lot of people. Obviously, there's low inventory across the country now. And so for people who are even, fully into investing, but still working a 9 to 5, just as you said, you got to do it on the weekends and nights. And that's not when those properties are gone in a day. In the old days when REOs came up, great, that's going to last a couple hours until somebody puts some cash on it. How did you eventually figure out how to get out of that part? And then was it really notes that took you into another realm?
Yeah, it was the notes. And having the experience I had, first you always look at, okay, let me maybe look at rentals or rehabs in other markets.
Yeah.
And we had built our primary residence. We've done rehabs. If you're not there every day, you have no idea what's going on. And
completely
even if
agree.
you think you know what's going on, you don't.
Yeah.
And from that standpoint, being a control freak, it's okay, I'm not going to try and manage from afar. It's hard managing construction when you're there, never mind from afar. So that's really where it got us into that note investing space. And I started with, just a few notes that were low dollar to try and see, hey, do I like this? And being an engineer by background, and notes is really kind of like game theory and problem solving of, okay, this person's not paying. How do I get them to pay? What can I do? Like, what's the next chess move? It allowed me to use my brain, I think, and be able to think and I'll just go back to tax liens. And again, people make a lot of money on tax liens.
Yeah.
But to me, it's boring. It's like you buy it and they either reinstate or you go to, there's nothing in between. Where notes, there's back and forth. There's crazy stories. Like we had one yesterday where, the guy was going to pay it off, but he also runs a assisted living facility and a woman jumped off the 3rd floor of the building, so he couldn't pay it off. And, you hear some of these stories that just like, man, the lives that some people live just are mind blowing.
Yeah, these are all interesting. I want to get into the clarifications between notes and tax liens, but I wanted to go back on your construction thing because I think it's really important for new investors right now. Construction, I agree completely. I've been flipping my whole life, but I'm a control freak as well. And I'm such a control freak that I had to hire a project manager and never show up because everything makes me insane. And that's when I live 5 minutes from the property. So if I lived, try to flip out of state, I will, that trust factor just doesn't work for me. Can you give a little bit of more, clarity on why new flippers should be careful now with your construction background?
So, wow.
This is a very common forum topic where you and I both show up together.
Let's just be, if you would know, so let's say you have a property and you're rehabbing it. Let's say you don't have running water on this property. And let's say you are nice enough to go put a porta-john out in the yard and so forth and so on. Historically, figures, I'd say probably 30% of people may actually go out and use it. And it's only to use it when they're doing, not, a liquid release, I guess.
Yeah.
Soda bottles, water bottles get filled with yellow liquid and get left in the walls all the time.
Yeah.
People doing things in bathtubs or wherever. It's pretty grotesque. That's just from a cleanliness standpoint. Then from a, construction standpoint, if you can't see it, you don't know. And I've seen jobs where they've literally, cut holes in ductwork to run a pipe through ductwork.
Yeah.
They've cut joists, they've cut studs. It's supposed to be a bearing wall, and they put the studs 24 inches on center. They didn't waterproof showers or waterproof floor, tile.
Yeah.
You name it. I've built so many, I built homes, I've built townhouses, I built apartments, condos, you name it. I've pretty much probably seen it. Found people sleeping in bathtubs in units that, were getting divorced and living in the house. It's unbelievable the amount of stuff that goes on when nobody's around.
Yeah, these are just really important because I feel like it all looks good, especially now. There's a lot of shiny objects out there, so it looks attractive to get in there and try to flip a property or try to do a live-in flip yourself. But none of these things really are that have the high potential to work out. As even experienced flippers like myself, I still hit the skid sometimes because things change, or you find something, as you said, behind the wall that you would never expect to be there, and that can happen at any time.
Well, here's another thing too that people forget about. Okay, you've got your painters scheduled for Monday and your finishers scheduled for that, following Wednesday or Thursday, your drywallers don't show up. And then, they don't show up or they don't finish. Then your painters show up on Monday and the painter's like, hey, I want to get paid for the day. And you're like, I'm not paying you. And then they're like, okay, we're not going to show up again until you pay us. And then that person's like, well, I'm not going to pay you. And then they waste 2 months trying to find a new painter. Yeah. Or you pay them and then good luck trying to get it back from the drywall guy who you probably already paid to do the work anyways. I mean, the stuff like that always happens as well. That is above and beyond just what the physical looking at the work. There's the management and coordination of all the different trades that you have to make sure they're all in line.
Yeah. And I mean, I'll get your take on this. Even myself, I've worked with so many different contractors. Even when I'm like on a good streak of flipping, I still end up firing the contractor because they eventually do something wrong or they start, goofing off or trying to overcharge me when they're getting more jobs. That's for someone who's been in it 30 years. For a new person, you go on Angie's List to find a contractor and you think you're going to get a great job and finish on time. That seems insane to me that somebody even thinks that's possible.
Well, that, and again, I used to work for a contractor and been in the business for a long time. When I see people start saying, well, I'm going to give this guy a bonus because he'll do the next one better and stuff. And it's like, it doesn't work. It's nice, but no, it doesn't work that way. Yeah. It's, the way I like to explain to people, it's like going on a date and bringing somebody to like a fancy restaurant versus a normal restaurant. That really doesn't win you any more kudos, like for the next one. If it's somebody that you are looking, maybe, depending on the type of person that person is, but typically it's like, that doesn't buy you anything,
Yeah, a nice dinner when you're an hour late doesn't help. And those contractors sometimes just taking half days all the time. And you don't know if you're not there. I mean, you really have to be there every day. Yeah. Well, since we've hopefully scared the new people off from flipping right now, especially with rates, let's talk about the differential between notes and tax liens. I like what you said about tax liens because there's really nothing for you to do. It's just like pretty much average, sit and wait. Hope for the best, maybe you get 50% and then you still have to turn them over. So it's not like an easy thing. What's so attractive to notes? And if you could just give us like a little bit background on how it works, because even for me, notes is still something I've never dabbled in. I know my dad tried, but I think for the regular investor, they may be scared, but it's a pretty interesting option.
It is. And, I always joke to people, if you drive in any major city, who owns the tallest building in that city? And people will sit there and think, and then I'll tell you, I'm like, well, let me tell you, it's a bank. And, let's be honest, it's a bank. They control everything and own nothing, that whole Rockefeller strategy. Unfortunately, though, and where people go wrong is they think they can operate like a bank in some instances, which you really can't. And, like seller financing, everyone's into seller financing right now, which to me is awful idea. And I could talk hours on seller financing, why it's bad. But with notes, what it is, I've heard of most people have private lending, where you give somebody money to go do something that's secured by real estate. What we do is we buy the loans on the secondary market. So I'm just going to use Wells Fargo because everyone probably knows who they are.
Yeah.
They give Jonathan Green a loan for his house. And let's say you're buying a house for $500,000, you're putting $100,000 down, $400,000 loan. Most people don't realize about 90 days after you sign all that paperwork, you get a letter in the mail which you don't even know what you signed, by the way.
No idea.
You get a letter in the mail that says, please now make payments to this new address.
Right. You always think it's a scam. The first time I got one of those, I thought it was a scam. I was like, is this serious?
Well, guess what? Your loan was sold.
Yeah.
So instead of being sold to a mortgage-backed security or something along those lines, I may step in and buy it. So you're paying 70 investments. So now I come in and now you make your monthly payments to me. And, I don't have to worry about toilet leaking, roof leaking, any of that. You handle a property. I'm just collecting the payments. Now, what we also do is, or what we like to specialize in, is non-performing loans. So, John, you stop paying your mortgage. And most people think that after missing one payment, the big bad banker is going to come knock on your door, grab
it's
you
all over.
Yeah, choke you out of the house and throw you out and say you're done. That's not the case.
Yeah.
In any way, shape, or form. There's laws they have to follow, foreclosure laws, that can be anywhere from 90 days. Well, you have to be at least 120 days behind before you can foreclose.
Yeah.
And then on top of that, it could take another 3 months to 3 years to foreclose on somebody.
Yep, I've done it, and it takes a long time. And then we used to leave them there for an extra 2 years on paying because we were nice, and then they would still get mad when 5 years later we kick them out, like after living for free.
Yeah. So the first question people always ask is, why would you buy a loan when a person's not paying? And it's the same reason if you're a fix and flipper, why you buy a house that needs to be rehabbed, because you can buy it at a discount and you can repair it and then turn around and sell it for a profit. We do that with non-performing loans. And I'll just give a hypothetical of somebody owes $100,000 on their loan. We buy it for $70,000. Okay. So we get $30,000 off. We call that borrower, and let's say they're a year behind, and say, give me $5,000 down, and because you can't make all the payments back up. You're $20,000 behind. We know you don't have that. Give me $5,000, $3,000, whatever, and then start making your payments again. And then once they start doing that, I'll call it recast the loan, which is we might roll the payments into a new balance or towards the end of the loan. And then, we just rehabilitated that borrower to get them back and rebuilt their credit. Now, okay, go refinance, or we'll turn around and sell that loan. And we might, because the loan has some, I'll call it hair on it, or it's reperforming, it's not going to sell for full price. Maybe we sell it for $90,000 or $85,000. So when you look at it, we pay $70,000, we get $5,000 off the top, so we're in it for $65,000. And then if we, get some payments in between and then sell it for $85,000, you can make, in a perfect world, just like the HGTV shows, make everything look perfect.
Yeah.
That's what happens. Now, does that happen all the time? No. There's delays, there's time, they file bankruptcy. But the one thing I'll say is, it's rare we do foreclose. And even before COVID, it was rare. But today, everyone has so much equity in their property.
Yeah.
They don't let it go.
Yeah, that's a great point. It's interesting, though, because it's something that you can really flip. I mean, it's a modified version of trading an asset, just the way. And when you were describing it, I was actually thinking of land flipping, because I've had a lot of land flippers on. It's something that I never did, but every time they come on, I'm like, well, I mean, that seems pretty awesome. They buy land from someone who's not doing anything with it, which in your example is the first bank, where they're like, well, they haven't paid. We don't really want to rehabilitate the lender. And then they do perk tests, get the land all ready, make sure it's connected to sewer. So they just upgrade it a little, and then they trade it out, for higher. They bought it for less, trade for higher. Similar to what you do, you're rehabbing the lender. But like you said, when you sell it, you already know there's kind of a ding on it for them when you sell it back, but at least it's back in a performing status when you sell it, right?
Yeah. And people always ask, well, why would banks sell? And the first question I always ask people is, have you ever had to deal with a bank just to change an address or open a new account or contest something? And I know you're laughing because you have.
Yeah, of course.
I mean, I'll see something pop up on our bank statement, and I'll get on the phone with them, and it's 45 minutes before they can even figure out that, oh, we even actually see it on your statement.
Yeah.
And 4 departments later. So think of a homeowner who typically most people get embarrassed when they aren't making payments to try and get on with a bank. Then they're tossed around from department to department. And, they're not sophisticated like I am in this and understand the process. I mean, I remember back in 15 years ago and stuff where, you have an 80-20 loan and you're trying to get with a bank to try and, rework something out or whatnot. So yeah, the banks are just awful to deal with, and they're not meant to handle distressed debt. Think of like a car manufacturer, on an assembly line. If it's going well and paying, just like a car's on the assembly line. If I said, hey, I want to paint this a different color or want to change this, it completely throws them out of kilt, and they have no idea what to do. That's the same thing with loans.
Yeah, one of my favorite things I see about it, at least, from in the forums, is when somebody who's brand new says, hey, this place is in foreclosure. It's owned by the bank. It looks like it's going to come out in REO. Can I just contact the asset manager? Like, do you know how hard it is to get to? Like, an asset manager is much harder to get to than like the president of any country. Like, you don't know who they are. You'll never talk to them. That's it. There's no chance.
It's usually a third-party company. The one I liked was, there's one other day where the individual bought a HOA foreclosure in Florida, is living in it, but the roof has a serious leak and it's starting to grow mold. So he's trying to get in touch with the bank to see if they will come in as a lender to repair the roof and do all that and repair all the interiors for him so he can continue to live in it.
That seems like an unusual ask.
Yeah. And he's like, and I'm sitting there like, well, and then the original borrower was in the service and all this stuff. And I'm like, he's like, so they can't foreclose. I'm like, no, they can still foreclose, but they just need permission. But now that the deed is transferred out of that borrower's name, even though he owns a debt, basically the deed has already been transferred. So you're able to foreclose on that instrument now. And he's like, well, I can't afford this place. And I didn't realize there was another loan. And goes back to what we were talking about previously. People who are inexperienced, do things just on a whim and don't realize how much money they could lose or be involved in real estate.
Yeah, and I think there's this general push, like take action. And I've always said that taking action isn't buying, like relax. Taking action is going to as many meetups as possible, meeting as many investors. You don't have to buy right away. Like, I think that people think that, though. They either have FOMO or they watch and they're like, oh, my friend has, 2 multifamilies, so I'll just get one. Meanwhile, they have like the reverse archetype of a landlord. So they're never going to raise rents and they're going to get screwed left and right because they don't know how to manage.
Yeah, it took me to buy my first note. I spent a good 6+ months of research, studying and learning. And then I bought several and then I paused. I'm like, okay, let me see how these go. Because really what I didn't want to do is have 30 of them and then realize, I screwed up on all 30 and not realize it until I was buying the 31st one. I screwed up on the prior 30. So it's like, let me start with a few and figure out how it goes.
That's a great strategy. Yeah. I mean, it took me until 52 last year to invest in a syndication. And now I still heavily vet what I'm looking at. This is a little more passive for me, but I think that's a great strategy for someone like we're both saying, like, hey, at least 6 months of learning before you take a plunge. And I would say for people, no matter what asset class they're looking in, of course, on notes, you're not going to go visit the homes, but you can certainly do some due diligence on the areas so you know what you're buying. That's something that you want to do on every property, because I feel like there's a lot of people now who think that they're doing a lot as new investors or really as investors, but they're just on the computer doing stuff and they're not having enough reps in real life. You taking those notes and then saying, all right, now let me let these marinate for a little and see what the return is in the short and the long before you went forward. I think that's really smart advice out there and obviously helped you to figure out, yes, this is for me.
Yeah. And I think the two components that people don't realize is, one, there's the FOMO. And, when the government printed $7 trillion or whatever they printed the last few years, anybody could have made money in real estate, previously. I mean, literally, you just got appreciation because of inflation. Now you need to, manage the asset properly. So I think people had FOMO. So they're like, I got to get in before, whatever. And then the other is, like, I see people who are 22, 23, 25, like, oh my God, I have to buy now or do this. And I'm like, you've got a lifetime ahead of you. Like, real estate is not a, get in, get out real quick strategy. The best way to make money in real estate is the longer you're in it, the better off you're going to be. Time heals all wounds. And, you look at property, like, okay, say I bought a property for $250,000 and market goes down and it's only worth 200. Well, if it's renting, cash flowing, or even breaking even, I don't need to sell it. I'm just going to hold it. And eventually, it will go back up eventually over time, because the dollar is constantly being devalued. And over time, it will go up. But also realize, if real estate appreciates it, I'm just going to pick a number, 5% per year. It's not linear, Up, down, up, down,
up 10, down 10, bang in the middle.
It's going to be 5% per year. And I'm like, well, historically, that's the average. But, when you have 20% 3 years in a row, if you see a negative 5%, that can happen.
Yeah. I mean, again, this is like, cycles. Obviously, we've been through cycles. And, I think people who are getting in now, they're looking at interest rates, and that's kind of what they've been presented with. But there's just so much more due diligence to do on not just asset classes, but types and the people that to make sure that you're well vetted going in. When you first got started, how did you start getting in touch with other investors to even know what you were doing? Were you in construction at the time and that helped? But let's go back to your background on your first kind of foray into real estate.
Yeah. So when we started doing, and again, I was in my mid 30s, when we started doing so our first was our primary residence. And for that, I wanted to I was overseeing it was a local developer who did a lot of single family and townhomes that I was doing their multifamily division. And I had probably about 50% of the contractors they used, I used for my home, specifically framer, windows, drywaller, plumbing, were pretty much them. I had, HVAC. I found a local guy who was more cost efficient, flooring guy and tile guys, honestly. So, no disrespect, but dime a dozen, meaning there's a lot of people who do that. So I found more affordable type people for that.
Yeah.
So I mean, that's kind of how I did, but like framing, windows, siding, roof, like that was something like, okay, I need the most professional people I know to do that. Then once we started doing, we were doing the BRRRR strategy on our rentals. We were finding they were all over, in the DC area, but some might be an hour and a half away. We'd find local guys. And the biggest thing for me was up front. I'd tell them, look, you don't get paid till the work's done. I will be there. I'm not paying you up front unless you're buying materials, and I'll go buy the materials. And secondly, here is the detailed scope of work. Literally like outlined everything, like, okay, living room, I want you to rip up the carpet, install this type of flooring, specify the type of flooring. I want this type of base installed. The base is getting this color paint, the walls are this, the ceiling's this, whatever, very detailed in regard to, I want the outlets changed. So there's no coming back and that's extra. There's this, there's that.
Yeah.
Completely defined. And when you had people like that, what's interesting is the guys who talked about how great they were, could tell they were just BS artists. I wanted the guy to come in and look at it and start asking questions. Well, what do you want to do here? What do you want to do here? I'm like, okay, this guy knows what he's doing.
And some feedback, like, I wouldn't put it there. The outlet's going to be better here. Then, that's not an upsell. They're just trying to help.
They're trying to help. And that's somebody who knows how to do the work.
Yeah, that's a great point.
So versus a guy that's, pulls out his phone and starts showing you, well, I did this and I did this. And I'm like, I don't give a, what you did. What can you do here? How long is it going to take you, and what's your price?
Yeah, I mean, first of all, when you look at the photos, it's the choices that really are what looks good in the photos. I'm not looking at like, wow, boy, that that island's really straight. It better be straight. Yeah. It's just a quality control thing.
And then there's the what's your budget? When someone asks what's your budget, I'm like, see you later.
Let me see how high I can get to hit the top of the budget. Yeah, it's a long road with that, and I think that's what people need to be careful of. Hey, it's Jonathan. This is just a brief interlude in the middle of my episode with Chris Seveney. And what I think is cool about this episode, what you heard from the beginning, is Chris and I have been doing our thing on BiggerPockets for 10 years. We never met in real life. Now we still haven't met in real life, but you'll have the opportunity to meet a lot of people if you attend the BiggerPockets conference. They didn't pay me to do this advertisement, but I went to the conference last year for the first time as someone who's been investing for more than 30 years, and I loved it. And I am a full-on introvert. I did hide in my room a lot, but I got out, saw everything, met all the people that I've had on the podcast in person, and I'm doing it again in October in Cancun. So you can go to BiggerPockets.com, check out when the conference is. It's in October, in the early part of it, and hopefully I'll see you there. Let's get back to the show. Did you like managing the construction part? Because for me, it just drove me crazy to be on site and to just see, like, I told you to do X, Y, and you did Z. Like, no matter how much I tried, I could never really get the perfect. A couple times it works, but then eventually they just go off the map.
Yeah. So for my full-time job, when I was doing it after 15 years, I got burnt out. And, the joke is you go to the dark side when you work for a developer. And what I would tell them is, it actually was interesting because one of my first projects was a very high-end condo building just outside of DC. And the GC we're using, company I worked for at the time, they were closing their office. So I went to go work for a developer. My boss at the time went to go work for a GC. The GC he went to go work for was doing this project. So basically now he was working for me, actually. And the first thing I told him, he's like, why'd you go to developer? His name was Derek. I said, Derek, simple. When I'm on your side, I have to manage 60 subs and I have 60 people to yell at.
Yeah.
And, I'm tired of the roofer telling me he can't complete the roof because a plumber didn't flash or provide the flashings for the vents. And then I go call the roofer, and the roofer says, well, I can't provide the flashing because the roofer didn't provide me this. And I'm just like back. So I told him, I said, instead of yelling at 60 people, I only have to yell at one, which is you. And then you got to go yell at the other 60 people.
Yeah.
So yeah, it got old. I mean, I still love managing construction, but it's some of the BS stuff. I was up in New England for, first 10 years, and up there it's union contractors, which that is it's good and bad. Perfect example is, I always use a story, getting a microwave installed, and you wonder why, like, cost of housing is so much, union work is very expensive. And to get a microwave installed, you have to have a Teamster bring it from the truck to the property line, because the Teamster isn't affiliated with the AFL-CIO, so they can't come on the property. So then you have to have a laborer take it off the back of the truck to bring it to the exterior elevator hoist. There's an elevator operator standing there all day long to bring him upstairs. So then you go unbox
Not cost
it.
effective.
Oh, no, it gets better. Then you got to go unbox it. Then once it's unboxed, you have to get the carpenter, the HVAC guy, and the electrician all together, because the carpenter's got to screw it into the cabinet, okay? And then the HVAC guy's got to connect it to the ductwork, and then the electrician has to plug it in.
Good luck getting 3 people to. I mean, I guess on union they're on the clock anyway, so they'll wait. But you were saying before something that makes so much sense to me, and for anybody who's slipped. You basically spend half the time just listening to people point their finger at each other, plumber and the electrician. Now they don't want to be in the space at the same time, so that's why I always tell everybody, your first flip will take 2 to 3 times as long as you think. And that's like a very low estimate, in my opinion. It also costs 2 to 3 times as much, just because you just don't know anything, and you're not going to be able to. I can't even manage contractors.
Yeah. And what most people do is they over design, meaning that, okay, I'm going to get $1,000 a month rent for this unit. They're putting in solid 3/4 inch floor. Like, you're ripping up the flooring, you're, multi-paint colors on the walls. It's like, no, you don't need all that.
Yeah, right. It's not a short-term rental. It's a very low-grade $1,000 rental. Like, let's just keep it easy. What's been your favorite asset class of everything? Is it notes? I mean, is that the thing that you're sticking with in terms of the overall classes?
Yeah, I mean, for me, I love notes. I love what I'm doing now. If someone said, hey, if like my house next door went for sale and I could buy it to go build another home and act as kind of a developer on that, I would love to go do that as well. That's more of kind of like the hobby, though. I wouldn't want to be a builder day in and day out. The notes I really love because 2 factors. One is we do try and help people, keep them in their homes. Something that I don't mind. Plus, you're dealing with a lot less vendors. Meaning, again, when you're fixing, all the subs and trades you got to deal with. For us, we deal with a servicer and an attorney. The servicer is a company that collects payments for us, and then the attorney. So
yeah, it dials down the process a little, but it still has the kind of fun of real estate. And I do agree. I think that if you're repurposing these loans and getting them ready to go back, I mean, you're helping someone with what was potentially going to be a disaster for them.
Yep.
Yeah, I think that's important. We talked about that on notes before. So for someone who's interested in notes, they're not just available to anyone. Anyone can go buy a house off the MLS, but is it easy to just go buy notes? Because you have to have some experience, I think, to get in the room where notes are available.
Yeah. So, I mean, there's a few portals you can go buy notes, but I think what people got to realize is when you're buying notes, unlike buying real estate, there are much more levels and layers to the laws you have to follow. And, each state has their own laws regarding licensing and certain things. Then you have federal laws because it's a consumer loan. You got to deal with the CFPB. People have heard of Dodd-Frank. So much that you have to pay attention to and be careful of, because if at any point in time, a borrower can for no reason turn around to sue you if they think like something, they don't agree with how much is owed. And it can cost you a lot of money for that, but also just the amount of information. Like, you're dealing with people's private information, social security numbers, how much they owe. You can't share that stuff with people. Like, you can say, oh, I bought a note for this much, but you can't say, oh, well, yeah, I'm buying this note and John's a borrower and John, basically owes me $300,000 and here's his social and here's where he lives. Like, and I see people do that. I'm like, can't do that, people. Like,
Yeah.
Put YouTube videos up showing like, here's what I'm looking at with the person's name and address and how much behind. And I'm like, oh, do you know how many federal laws you're breaking right now?
Yeah. I mean, it goes to the thing that you can get into things with the best intentions and get very quickly overwhelmed with just not understanding how difficult. I think that way almost about anything. I mean, to me, the closest thing to passive is, LP in a syndication. Nothing else is really passive to me at all. I mean, the fact that anyone would ever say landlording or flipping is passive in any way, oh, well, I have a team. It's like, well, if you don't manage a team, you're going to lose 3 times the money every time.
And unfortunately, I'd say in today's world, there's so many gurus out there that want to make it look super easy just by doing a little bit of marketing. You can do this, that, and then retire and make $250,000 a year.
Yeah.
That's not the case. I mean, that is not the case.
Yeah. And I think that same attitude is what's pushing people to the point where they're wanting to leave a W-2 job way too early, when that's how you make money. You can't make money as an investor to invest. Like, you have to make money first, so you have something to invest that can start a snowball. And I think that's what a lot of people are missing, because people are looking for, life hacks or anything to go quicker. But as you said before, it's buy real estate and wait. That I was going to say before when you were talking about that, I think if I look back on my, biggest misses in real estate, I don't think about the properties that I didn't buy, because sometimes I just wasn't ready, or I just made an error. But those ones don't keep me up at night. The ones that keep me up at night are the ones that I sold too early, because that's almost everything. If I would have just focused more on keeping over the years, I think I would have done better. And I'm still trying to kind of wrap my head around that now. Do you agree with that?
I do. And interestingly enough, we had a vacation property under agreement for $610,000 in February of 2020. And it was owned by an LLC that there were 3 different owners, and they couldn't get the third person to sign off. And then COVID hit. And then I thought, okay, COVID hit. I'm like, this is going to probably impact pricing. And I thought in a negative way. Yeah. But of course it didn't. And they ended up putting it back on the market, and they sold it for the 610. I look at that property today, and the properties around are selling for 1.1, 1.2. And I'm just like,
I literally have just like a toolbox of those.
Yeah. And I'm just like, you got to be kidding me. But what's interestingly though, is like, I sit here and like shake my head, but then I look at it and I'm like, it's a summertime vacation rental. I'm like, there is no way that property, if somebody was buying that today, it could cash flow. Right. Because, it's a 600 number or 610, it really wasn't going to be cash flowing. And I know, again, rental rates have gone up in these areas, but I'm just looking at some of the numbers. I'm like, these just don't make sense, but I still wish I owned it.
Yeah. I think that's a really good statement too. And it's just when you go through 20, 30 years in real estate, there's always going to be properties where you miss, but then you have so many others that you did well on, and some that were just like a learning experience, I would say, that we have to chalk it up to. When you first got into notes, were there any blunders that you made? Because it is complicated to get into in the beginning.
Oh man, how much time do you have?
What was the biggest blunder, at least a thought process in that?
So
the
biggest
realm?
Blunder I had, and a lot of people make, is, letting your ego get the best of you.
Yeah.
And so I had a borrower who was behind. This guy was a complete a-hole. And I was like, you know what? I'm going to fight this guy. And there's certain fights that you just shouldn't take. And this guy was connected with the city. He was connected with the city. So they were making my life a living, what. Yeah. And at the end of the day, I end up having to give this guy money pretty much to have him walk away from the house, even though it was underwater and this guy hadn't paid him 5 years. So the fact that you got to pay somebody to lose money, that the person is just a complete POS, knows how to game the system, just it's in your nature that you want to fight and you don't want your ego to get the best of you. And I probably could have gotten out of the deal early on and not lost anything, but I didn't, and I ended up probably losing, I don't know, $5-10 on the deal, which is 10 grand, 5-10 grand money that, and the only reason I lost it was because I had that fighter's mentality, and I'm like, I'm not going to let this guy win.
Yeah. That's a really good point. I've definitely struggled with that, and I think I've learned over the years. It's very. I was a trial attorney for years, so I did 250 trials. I like to fight. It actually makes me work better when I'm fighting, my coach says. But I've also learned, like, there's a lot of fights that you don't need to take because the actual win isn't really a win. You know, it's like when people say, well, I'm going to sue them. It's like, well, you're going to pay $20,000 to sue someone for $10,000? That doesn't make sense. And that's a discussion I had on a flip that I was doing. It was like, 15, 20 years ago. My partners, walked off with some money and I'm like, I'm going to sue them, And the guy's like, why? You're going to pay me more than you're even trying to recover. It's stupid. But it is hard. The ego gets in the way, I think, a lot in real estate. I see it a lot in kind of puffy syndications now, with operators who aren't as experienced. But as you were saying before, with the marketing out there, a lot of people can make a lot of asset classes and programs look pretty nice now. How can we help new investors not grab those shiny objects and kind of focus on learning the real way?
Yeah, I mean, for me, the first thing that always when I see in BiggerPockets in any forum post is when someone paid $30,000, $40,000, $50,000 for, some training. There's one where there's this REIT out there right now that's getting completely blasted. They've cut all distributions.
Oh, I saw that.
Yeah, I mean, the CEO of the company posted a video 3 weeks after pausing all distributions and withdrawals, here's my new renovated office space. And I'm so happy because I have my own private bathroom. And I'm like, yeah, I'm sure people are happy with that. But in the same token, the guy has a $50,000 a year, $50,000 training course that I'll teach you how to find fix and flip properties. I'm like, your business is probably going under.
Yeah.
You're not focused on it. And I don't blame the guy. If I could get 4 people to pay me $50,000 a year, why would I care about anything else? Because I'm making... And, and they promise these people a world. And I'm sitting there thinking, who would fall to pay? I got a master's got a master's during COVID at Georgetown, which I think Georgetown's a pretty good school.
Great school. Yeah.
It cost me $30,000. And I'm sitting there thinking, my professors who was in real estate, every single one of them ran $1 billion hedge fund or REIT. And, you learn from them. And I'm like, the one thing they don't teach you is, here's how you market, or and all these
social media.
Yeah,
they don't even have an Instagram account because they're too busy making money.
But most of these training courses that people pay all this money for is, how to find the deals or and I'm like, you don't need to pay $50,000 for that.
Well, that's where we started. We sit in the forums still with our experience these days to try to help people. And I think the forums are a great place. It's messy in there, but when people come with great questions, the answers that they get there on the BiggerPockets forums are literally from experts in the fields who are just, I like to help people. Maybe my delivery isn't what everybody wants, but I think if you come to a place and you can get all of that for free, or at least search it, that's a much better way than saying, hey, I'm going to take $50,000 and pay somebody that right away when I don't know anything. Because I always think that people are paying because they think it's going to get done themselves, and then they're still not going to do the work. So it's a double loss.
No, it is. And, if anyone listen, if you're a newer investor and you're looking at the forum posts or looking to post something, here's the best advice I could give you is before you ask a question, spend some time looking it up and then post a question. Hey, I've been researching this and this. This says this says that. I'd like to get people's opinions.
Yeah.
Then you'll get a response. One that I saw the other day is, what's the best zip code on the East Coast to invest in? And I'm like, so.
Well, that's that's the same as what city should I invest in? I'm like, what? I mean, first of all, I was joking in the forums. I have to say it because I never talk about it on the podcast. But if you just say anything about where should I invest, there's 18 people from Columbus into the forum in 1 second. And you're like, is this the only city on earth? But they know what they're doing. But you have to know. It's like when you go in any forum, let's just take Facebook, for example. You go in a Facebook group and you ask, hey, I need a real estate agent. And then the people who answer are all real estate agents. I'm the best. That's not helpful.
This one guy just posted recently, and I refrained because I was going to basically say, this place is a you-know-what hole. And he's like, Toledo is the best city in America to live and invest in. And I'm like, No, I've invested in Toledo, and trust me, it is not even close to the best. And I'm like, you must have, reading this person, they literally just bought a property, they're house hacking, and they're all excited. And they got that new, when you're in real estate for 30 years, yes, we're just grumpy old men because we've seen so much. And I appreciate the younger people having the energy and that, that spirit in the pop. They'll be like, oh, this is awesome. Like, wait till you get to our age, just like your grandparents who are grumpy and old. That's just what we are.
All house hacks are awesome until the furnace breaks and you have to pay $8,500 in the dead of winter, and then you don't have any income. You are already a net negative right now, house hacking, which you would be, but like you just killed your profits for 3 years after you move also. And
then you got 3 roommates and 2 of them hate each other. They're threatening to kill each other. And then what do you do? And then they know you own it. And then that and the other one that, I pull my hair out every time I see is just bought a property, got financing. Now I want to convert it to an LLC with a holding company in Wyoming that's in a land trust versus another trust. And I'm like, man, oh man.
I wish they would just ban the letters LLC. From any mention. It would help us all. But so over your years, though, I mean, we always joke about it, especially in the forums. But like for new investors getting into the game right now, what asset class do you think is smart? Is it house hack? I mean, of course, I think house hack is a great idea, but right now the rates are high. Like you can't even cash flow on your house hack until you leave, and then at that point it could be minimal because there's low inventory. Where would you have somebody look if they've done 6 months of research? They kind of feel ready. Their finances are generally in order. Mm-hmm. What asset class do you think might be attractive for somebody now?
I'm still a big fan of the long-term rental.
Yeah, I agree.
And the reason why is, yes, rates are high. Yes, your cash flow may not be where you want it to be, but it's something that when you model it out, again, anything that's a long-term play, I'd say would be a good investment. Now, one thing I'll add to that is you also have to understand your investor profile or DNA. For example, note investing. This is a simple example. I deal with attorneys and it's a conflict-oriented business. So if I am somebody who is, just very, I'll let them miss another month. I'll let them miss a month. I'll let them, kind of, and those types of landlords and stuff. It's like, they haven't paid in 3 months, but their 5th grandmother passed away, and
that was my dad, and then he made me collect the rents.
Yeah. So, if that's the type of person you are, note investing's not for you. Because you have to basically be, saying is pay, stay type deal. And it's the same thing a lot of times with rentals, so you have to understand the type of persona that you have that also fits. But I think right now there's going to be, over the last several years, we've seen too much volatility in pricing and interest rates. I think we're still going to be in the market for that. So anybody who's thinking, okay, this is a 5-year plan that I have in place, that I think is the people who will probably be most successful, not people who are trying to time the market.
Yeah, I agree. How could we ever time the market? We are not, that's not anything that we have control over. I've always said, I just keep looking every day. I haven't been buying a lot in the last year because nothing really suits my buy box or what I'm looking for. But when it does, I'll be ready because I don't take breaks, being an investor for this long.
Yeah, I know you can follow certain politicians to follow stock trades, but unfortunately none of them have kind of real estate trades that you can follow or, know more about. So
Yeah, but I mean, that's why it's keeping up with social media is one thing. There's parts of it that can really be a quick educational aspect that can help you when you follow the right people, but also just finding people that you can follow just through email newsletters and stuff, I think is probably a better thing for someone who finds a couple of great people who are putting out good content and then just getting on those newsletters and just reading the thing from cover to cover and really then maybe asking someone some questions about it. I think you were saying before on how to pose a question, which I would say is the same way, as posing a question in person or in the forums is I've done X, Y, and Z. I'm thinking this is the best option. What's your take? And then you can just get really educated opinions. And it's much easier to answer for people to give you an answer when you've kind of laid it up. Hey, I've done this. Here's X or Y. What should I do? It's just an easier thing for us.
Yeah. And the other thing I'll mention to that, which that is awesome advice, is hear from different types of people. Don't just subscribe to all realtors because, minimum home price is going to be $5 billion in 2 years if you listen to all realtors. Same thing there's pessimists out there as well. Take all the information in and make your own opinion. But what I recommend, and I see this a lot on the forums, is somebody gives an opinion that if you don't agree with their opinion, then you make it personal.
Yeah.
There was recently a post where, someone invested in a syndication. It didn't go well. And, one of the, I think he's got the top poster on BiggerPockets basically said, unfortunately, you kind of got to look yourself in the mirror too, because you clearly didn't read the PPM. And that person went off on them saying you work for them, you do this, you're an awful person, and it's like, no, the person's trying to help other people, because if you actually read the PPM, which I did do, this deal had nothing to do with real estate.
Yeah.
Nothing. And it was clearly written in there, the risk involved and everything that could go wrong. And people didn't read it and thought, oh, well, it's a real estate company. You weren't investing in real estate.
Yeah,
So,
I know exactly which one that is. But that's good advice, though. I mean, look, I think everybody needs to have just a big pile of self-awareness to get good at this. We talked about ego before, but being self-aware, as you were saying, like, what's your personality type? What investments are going to work for you? Are you good working with others? Are you the GP type or are you the LP type? Which do you want to be? And I think these are things that you can only learn over trying out some stuff. But just as a really great point that you made when you started in notes, you just got in a little and then you waited to see how they did. I think that's a great piece of advice for everybody. Don't try to take 3 flips at once. Do something small, do a lipstick flip, or flip a kitchen in your own house. Try to figure out what it actually takes before you bite off too much, because that's how you end up losing all your money, going bankrupt, and then trying to start again.
Yeah, that and the people who have never even owned a property or lived in one are going to go buy an 8-unit multifamily.
Yeah.
And I'm like, and it's 50% occupied. I'm like, now you're dealing with 4 tenants and 4 unoccupied units. Do you know how to market a unit? Do you know how to find somebody? Do you know how to manage property? I mean, you've never owned a property in your life. That's hard.
Yeah.
Start with 1, baby steps.
Yeah, baby steps are key. Go to meetups, talk to people. Come find Chris and I in the forums, because we're there all the time with some of our other old school buddies from BiggerPockets who I have coming on here as well. It's been fun in there over the years.
It has. And people got to realize too, it's a marathon, not a sprint. I'm 49. I didn't start really investing in real estate, my own personal portfolio till I was in my mid to late 30s. And I've done really, really well. And that's not me shining my ego. It's just showing that you don't have to be 25 years old and think, oh my God, by the time I'm 40, I have to start at 25. It's, and it's not do it all at once. It's, save money, and I think that's the biggest thing people need to do is start with your own money, save some, continue to earn it. I can't tell you how many people I've seen leave a W-2 only to go back, because investing is not you get paid every 2 weeks. It's, I have a good month, I have 3 bad months. I have a good month, I have 2 bad months.
I need a new roof.
Yeah.
Yeah, that's great advice. Awesome, man. I'm really glad I got you on this, and I look forward to staying in the forums with you. Where's the best place for people to get in touch with you besides BiggerPockets, where Chris is on there? Is it at 7E Investments? And that's the number 7, the letter E, and then investments.com?
Correct. Yep. Go to our website. You can contact us through the website. That is the best way to reach out, learn more about what we've going on. Feel free to ask us questions. And like you said, you will find me on BiggerPockets. And if you're a member of BiggerPockets, feel free to connect with me as well. And
Yeah, and just to go back to where we started, I agree. Over the years, just from BiggerPockets, I've made so many in real life friends, virtual friends. I've learned so much myself about things. So I really think that if there's people out there who I don't know what first step to take, I'm too scared to go for a meetup, just get in there and read stuff and then slowly start to figure out who's reliable. I think you can really figure it out if you stick around, with a good attitude. You'll make really, really good connections. And as me, who I'm a licensed on-market agent, I've had hundreds of referrals from there, and I've never once asked for business, because a lot of us just go in there to answer questions because we're trying to help people, just like doing this podcast. We're here having a conversation for an hour. Nobody's throwing money at either of us. This is a way to help people not step in all the potholes that a lot of us did over the years.
Well, and it's funny too, because we've raised a lot of money from BiggerPockets, but it's not from advertising or anything along those lines.
Yeah, exactly.
What it's from is exactly providing a free information, content, or people saying, hey, thank you for answering that question.
Right.
And for people getting started, there's you can see who posts a lot, or if you go to BiggerPockets /stats, you can see like who's been frequent. Feel free to reach out to people and connect with them. Say, hey, would you mind setting up just a 15-minute call just to chat? Now, 80% of the people may say no, but if you reach out to 5 people a day and get one person to reach out to, that will just continue to grow, and just have a specific topic of, hey, I know you do this. What should I be on the lookout for?
Yeah.
When people, ask the question, and it should be, but remember, that person's spending their time to talk to you. So don't make it, show me this, give me this, I want to do this. I had somebody do that recently, and I basically was like, oh, yep, gotta go. Thanks. See ya.
Yeah. Be my mentor.
Yeah. And they wanted a free hour mentoring session. And what can you do also to help them? And I don't mind helping people.
Yeah.
But when everything's, I need this, I need that. And it's like, it's like, no, you want all this, and you want me to take time away from my day where I'm running a business too to do this for you. Like, what am I getting in return?
Yeah. Let's have a win-win. Even if it's a good relationship. That's why it's good to exchange some messages, see where you're at, go to some meetups. Then you have a little bit more runway to make an ask later. Well, it's been a pleasure, man. I look forward to keeping up with you in real life and in the forums as always, as we have fun in there. Thanks for coming on the show. Yeah, thank you. All right. That was Chris Seveney. I'm Jonathan Green. We'll see you next episode. Thanks for sticking around to the end of the show. And if you've been listening recently, you know that I'm giving you previews to the next episode. So let's do it. Next episode, my guest is Lee Yoder. We connected on LinkedIn. I started following what he was saying, and I was like, wow, this guy really is giving some relevant information to investors that can help them now. And then I really got into his story. Only 7 years in the game, now doing syndication. But the coolest thing about Lee is, this is his quote, "I haven't done anything spectacular, so anyone can follow in my footsteps if they want to." We go through his entire story from beginning to end over the 7 years and where he's going in the future. So stick around for the next episode with Lee Yoder, and I'll see you then.